Hey there, today we're going to learn about why my next guest is renovating downtown Cincinnati apartments, bringing back the charm in an old historic city, and making his investors money along the way. My guest, John Blatchford, coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real world strategies focused on creating long term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today's guest is John Blatchford. John is the founder of Kunst, an apartment investment firm based out of Cincinnati, Ohio. John, thank you so much for joining us on the show, and how you doing, my friend?
Good. Thanks for having me, Dwaine. Appreciate it.
We're looking forward to it. I kind of want to learn a little bit more about the Cincinnati, Ohio market. I understand that you specialize in the historic part of town. But for people who are not familiar with your background, can you kind of start off how you got started in real estate and what your current focus is on?
Yeah. So the company is Kunst. I started in 2014. Basically started kind of with a small, 3-unit building in Cincinnati. So in Cincinnati, there's basically downtown, and the neighborhood just north of that is called Over the Rhine. It's historically, a German neighborhood. The entire neighborhood is a National Historic District. So there's a lot of, kind of 3, 4, or 5-story brick buildings it's an Italianate style that was kind of perfected by the Germans in the late 1800s, early 1900s. So that's kind of the whole neighborhood, and that's where we're operating. And so our first building was just, a 3-unit apartment building there, kind of as a side project for me. Figured it out, learned a lot of lessons, plenty of pain and all that. But obviously learned a lot, and I guess, it wasn't too painful that I decided to kind of jump in full time 2015, and been, that's been my business and full time since 2015. So we've been growing it from there. Our focus is historic renovations in downtown or over the Rhine, Cincinnati, using these historic tax incentives and other tax incentives that are available now, including the opportunity zones, tax abatements with the city, local government, things like that, kind of whatever incentives we can add to the project to, make them more profitable.
Can you kind of talk about kind of like a Cincinnati, Ohio? I know overall Ohio is a very investable market. I talk to a lot of investors that are heavily invested in that market. I'm not don't know too much about Cincinnati, so love to kind of hear more about that as far as kind of like the opportunities and what are you seeing there demographically as well as economically.
Yeah, so University of Cincinnati is in Cincinnati. It's it's a big research university. It's actually quite close to the Overrun neighborhood we're dealing in. It's kind of just up the hill, so it's a true urban campus. They've done a good job of always hiring good architects, and they the campus is kind of within the city, so it's a real like city campus. So that's kind of a big driver of the university. It's a huge employer. The hospitals, research, those are all big. Procter & Gamble is headquartered in Cincinnati, Western, Southern. We have a decent number of Fortune 500 and even Fortune 100 companies, like certainly relative to the size. And around the early 1900s, Cincinnati was a massive city. It was even bigger. It was kind of the original Chicago. And then Cincinnati kind of screwed up and didn't do that great with public transportation. Chicago took off, and Cincinnati got left behind a little bit. But we have the infrastructure and even the kind of downtown architecture of, I would say, like a major city. And we're really lucky that there's kind of like embedded culture, wealth, all these things that make it an interesting city and make it, I think, a good place to be investing.
Mm-hmm. And are you seeing kind of like more influx as far as like demographic? You had mentioned kind of the drivers for kind of like the millennial age renter and things like that. So are you seeing kind of that more of an influx? Is it because it's like a trendy city, things to do, and of course close to the campus?
Yeah, exactly. And the downtown is pretty active, and that's where a lot of the employment is. And then kind of up the hill is the university and all hospitals. So the Over the Rhine is kind of sandwiched between those two. So it's there's a lot of opportunity there in terms of a place where people want to live. And I think Cincinnati, as far as the model for, a millennial, younger generation that wants to live in a city and be able to walk to things, be close to, sort of all the shops and everything else. Cincinnati is a great city, has a really good urban environment, and Over the Rhine, especially, has that. And, you can be in parts of the city, and they even have filmed movies there that you think you'd be in, Lower East Side or something. There were a few famous movies filmed in the past 5 years that, take place in New York City, but they're filmed in Cincinnati because it's, easier and cheaper. But,
Oh,
effectively it looks kind of like a, historic urban part of New York.
wow.
So yeah, so we have that kind of going. I think in contrast even to Columbus or some other peer cities, Indianapolis, which are great cities and have a lot going on, but they don't really have kind of that really strong, historic urban architecture that people want to live in and that we're taking advantage of.
And kind of could take us through kind of like a typical rehab project for you. I mean, as far as kind of like all of the older buildings, is there still a lot of supply of these that you can be able to kind of take on these projects, and could kind of run us through kind of like a sample like project that you normally take on?
Yeah. So, there's only so many that they've built, but a lot of them did get left vacant. The good thing in Cincinnati is that there has been this historic district, I think for 40 years. So there's been a decent amount of demolition and all that, but there is still a lot of opportunity for vacant buildings that need to be renovated. So that's, we're certainly focused there, and I think see a lot more opportunity there for a long time to come. But yeah, the typical project. So, we have now a group of investors. We're kind of always, taking on new investors, looking for new partners. But, we have a group of investors. We'll typically put in, 70% of the cash. We'll get a loan, construction loan for the remaining 30%. Our projects have ranged from 3 units as the smallest to now up to 20 units, all in historic buildings. And so we're looking for at least a 10% kind of annual, compounded internal rate of return to the investors. At least like a 2.5, 3 times kind of multiple on the investment. And, we're in it for a long period of time. And these tax incentives kind of require that we are, but also, they're great buildings. They're in a historic urban neighborhood. They're only going to grow in value, from my perspective, our perspective. So, we want to refinance, we want to get cash out through all these tax incentives, but, we're interested to hold buildings for a long time. We don't want to do any flips or anything like that.
Can you kind of talk us about the incentives that's from the city, and of course on the federal side with the tax incentives and things like that, as far as how does that able to help you kind of raise your business model, because you have all these incentives that you can kind of tackle to attack these projects?
Yeah. So there's the historic tax credits. There are federal credits, and then there are state credits. So Ohio actually has a really strong state credit program, but the federal credit is a 20% effectively of your construction costs, comes as a federal tax credit. So helps the investors pay less tax. So $1 million project, you can get a credit for 200,000 effectively. And then the state credit is actually 25%. So that would be an additional, say, $250,000 on a $1 million project. So combined, it's, 45% of the project comes as state and federal historic tax credits. In Ohio, it's even kind of better because it's refundable. So you have this, say, $250,000 tax credit. Whatever you can't use, you actually get as a tax refund. So that's, direct deposit from the government when the project is done. And the whole goal is they're trying to incentivize good historic preservation. They know that it's hard, it's expensive. They want to, the federal, local governments want to, support this kind of, preservation of these great historic buildings, but they know that there are challenges. And so that's the real incentive. And so as part of that, you have to do a fairly high level, high level of historic rehab. You have to, potentially keep the original floors, original doors, restore appropriate windows. There are challenges that come along, that are tied with the credits, but, the benefit is so strong. And also I think it's important to save these buildings that it becomes definitely worth it.
And as far as kind of like the future play, are you also looking at other different type of investments as far as converting them into condos or like Airbnb, like short-term rentals? Is there a play there as well?
Yeah, I think Airbnbs do fit in well. The credits try to incentivize that they're going to produce income. The buildings will produce income for a period of time. Mm-hmm. So they generally don't like sale, even including condos. But after 5 years, typically you could sell the building, you could sell as condos, whatever. So potentially our exit from these buildings, whenever it makes sense, would be as condos, because they're set up as apartments. we renovate kind of on the, higher middle to higher end, um, in any case. And so it would be, potentially a logical condo flip. It's not something we're looking at to do like immediately, like buy a building, renovate into condos. But for the buildings that we have that are apartments for a period of time, they could eventually become condos. Yeah.
And as far as kind of like where you see your business in the future, I know as you said, there's like a limited supply of these historical things, and eventually, either you and other developers, as the popularity of this area demand increases, that there end up being a shorter supply. Are you also looking at other markets that you kind of specialize in historical section, or is there any other markets that you would take kind of a different business model approach to?
Yeah. So yeah, there's a good amount of opportunity in Cincinnati. We've been focused kind of in this over the Rhine neighborhood, downtown. I think there are similar opportunities, and now kind of getting bigger as we scale bigger. The buildings also downtown are bigger, cost more money and all that, which I think we're kind of getting more set up to do. It'd be interesting to see if offices now get converted, a Class B, C office building that's in a historic building that they can't rent them out, might be a good time to, buy those and renovate them. So we'll see how, if those opportunities kind of come up in Cincinnati. But certainly, in the not too distant future, we want to expand to maybe similar markets that have a similar setup, a good state tax credit program, and historic neighborhoods that we can operate in and bring a similar model to. That's definitely like the next phase of what we're doing.
Yeah, definitely. Since you said the type of returns you can get, and probably making your investors happy, want to kind of continue to ride, and kind of like that approach that you're doing. So it's very good to hear that. Can you kind of take us through like a typical work day for you, and do you in particular have any special morning routines?
Yeah, so construction. Mostly people are showing up at 7. So one way or another, I have to be alive and excited by 7 a.m. So my schedule has moved earlier and earlier over the years. I like to try to get a jump on everybody. So typically my alarm is set for maybe 6:30, and I wake up sometime around then. Yeah, a little piece in the morning. I think we all probably feel the crunch of technology, and so I try to start my day with as low tech as possible. And if it's reading, Bloomberg magazine or a novel or whatever, just try to start the day with a more peaceful mind. I don't always do that, but I try to. I think trying to stay physically active, that's also been tough with COVID. Gyms shut down, all this stuff. But I try to. I was an athlete a lot of my life, a competitive athlete through college, and so I try to keep that as part of my life. Again, probably like all of us, sometimes that works and sometimes I fail, but I do think it's important. That's basically it, and I'm trying to get better again in the evenings. Maybe at some point you kind of shut down and you can kind of ease into the evening as well, rather than just kind of technology until the point you sleep, and then technology the second you wake up, and but you got to rest your brain a little bit. So
exactly. And as far as kind of like with your construction team and your other teammates and things like that, are you using any tools or resources to help you guys manage your day and be more productive?
Yeah, so right now we're set up as effectively kind of 4 people in the office. We have now an architect, kind of property management, myself, and then my partner does kind of all the tax incentive work. So say 4 of us kind of on the business side, and then we have 3 like full-time construction people. So they're managing the sites, but also doing the actual construction labor. I think we're probably growing on both sides in the coming months. But yeah, as far as I do think it's important to set up good processes. We're lucky to have a lot of tools we use to do this as far as project management. That's been really helpful. I know that there are probably much bigger software programs. For me, it's just a simple kind of task management software works really well that everyone can collaborate with, add comments to, add photos. It doesn't, so far it doesn't need to be much more than that. You can probably overcomplicate it. We do all of our contracts online, HelloSign, construction or otherwise, investors. We use a software called Inago, which is actually a Cincinnati company for all the property management, and that's been a total game changer. I'm sure everybody's hip to property management software by now, but it's probably a year and a half ago we went full into Inago, and it's way better than what we were doing before. Automatic invoicing, people can pay online, submit maintenance tickets, all that. So, Inago is a good one. I can definitely recommend it, but certainly property management software is important. that's probably it. QuickBooks, like anything else. We just started using a software called Roger for payment processing. We are the general contractor, so we're paying, I don't know what, 50 to 100 invoices probably a month, and so that got to be pretty hard to manage in a more manual way. So we're using software we can kind of filter all that stuff through and pay automatically through this and approve or deny payment requests and all that. No more written checks, and that's been in the last 6 months, and that's, I think, going to be really helpful too.
Yeah, I can definitely think 150 invoices. That could be a lot of stuff to handle. And so definitely help out a lot.
People, you hand them a check and then they haven't cashed it, and 2 weeks later you forget, and you're like, oh,
Yeah,
well,
exactly.
so
Exactly. That's a big mess there.
You got to set up systems as you grow. That's certainly been the pain probably of the past year. But,
Yeah, it's pretty cool to hear how since you have like architects and contractors and things like that, and mixing that, and how you guys collaborate that, and especially now with the property management software, so you got so many different elements of the business. So that's pretty cool how you guys get that stuff done. So awesome.
Yeah.
Well, thank you for sharing that. I know some people that are listening will find that definitely helpful a lot. And then kind of
Yeah.
finally, I always ask my guests, as far as kind of like what I always ask is regarding gratitude. So what can you say that you're most grateful for?
Grateful that I've had supportive parents along the way. Yeah, I think when I first kind of left the corporate gig and started this, the only thing my mom said to me was, just let me know if you need help. So that's probably the most amazing thing a parent can do. Of course, investors, the earlier they invested, the more risk they were taking, and we're just figuring it out, and we're still figuring it out. So, every person that's invested, obviously very grateful for that. They're taking a lot of risk with their hard-earned money. So I appreciate that. And yeah.
Yeah, definitely see like you guys growing as a company, kind of establish some authority there, and then definitely have carved out a nice niche there, especially in the historical section where it takes on a lot of tasks that you have to do, especially compliance with the city, and and especially working with federal subsidies. So it does take a lot of organization and things like that. So definitely hats off to you guys getting to this success so far. So I appreciate you sharing that. And then finally, we'll make sure to have all your contact information in the show notes and blast it out to the network so everyone can kind of learn more about your company and talk to you as well. Before online, can you share with us how do we get in contact with you?
Yeah, the website is kunst.us, kunst.us. And I'm available, email john@kunst.us. And that's probably the best way, responsive by email. I like to just reach out directly to people. If anybody feels like they want to reach out to me, I'm very open. Happy to help if I can, happy to partner with people, whatever that looks like. I always appreciate making connections. So.
All right, perfect. Well, I appreciate that joining us on the show. Continued success to you in 2021, to you and your family, and look forward to connecting with you again soon. Thank you so much for joining us again, John.
Thank you, Dwayne. I appreciate the time, and thanks for all that you're doing.
All right, thank you, and Happy New Year.
All right, thanks, Dwayne. You too.
Hey there, this is Dwaine Clarke, your host of the Wealth Through Real Estate Investing Show. I want to thank you again for tuning in and hope you're enjoying this valuable content. While I got you for a quick minute, I wanted to send you an invitation to join our growing investor community. It's called the Passive Investors Club. It's a group of like-minded individuals like you who are seeking financial freedom and to build true wealth through passive investing in commercial real estate. We take a totally different approach to investing that is opposite, that is pushed by the financial advisors and what we see in the mainstream media. We like to invest in real assets that we can touch and understand and that are not subject to the wild swings of the financial markets. We don't want to be part of the herd who pursues the traditional route, leaving our financial future to Wall Street. So if you're interested in joining our group and to sharing resources and opportunities, then go to passiveinvestorsclub.com/join. Joining the club is completely free and there's no obligation. And all our members receive our free Passive Investors course along with tons of resources and content. So again, passiveinvestorsclub.com/join.